So, very warm afternoon to everybody. This side Anurag. I'm the Senior Client Success and Learning Manager at BMN Capital, and here we are starting today's briefing session for the date 31st of March. That is the last day of this month, Tuesday. So, without wasting time, first we're going to discuss the technicals, then we'll see the economic calendar and try to identify that which are the datas which are important for today and which might have all the potential to change the market symmetry for today. Then we'll see the important news which are under development or what kind of development market is seeking, right, to have a new direction into the market because this is the last day of the first quarter of 2026. So let's start with the gold chart. So let's see that what we have discussed yesterday, right? So see over here, you can see the 1 hour time frame over here, and we have identified this structure, right? And there is the hidden bearish divergence which have worked successfully and went down. And when prices reach the cluster of our moving averages which are pointing upwards, right, this area act as a strong support area after the consolidation of 5 candles into the H1 time frame. In the early Asian session we have seen a very strong momentum into the prices, right? And I've told you that whenever you find any kind of very good momentum in the Asian session, that means something big is happening. And for that day, the market is going to range sideways, right? Because already they have burned all their fuels to push the prices upward. But yes, in the US session, we might expect volatility and good trading opportunity. Right now, the prices are moving sideways and still they are showing strength that they might continue to go upwards, right? But still, the momentum is not that impressive that, and it is telling us that after testing few levels, right, important resistance levels, prices might get a reversal, right? So now the important thing which we need to identify is that what kind of resistance, right? Where those resistance are located. So we'll see that, right? So first of all, the Asian session high, right, which is at 4619, that is 4620, is a very, very important resistance area, which have already been tested one time. So if prices reaches this level, chances of reversal is there. Otherwise, we need to watch the price action, how the price behave at this specific price level, and if there is any sign of strength that it might continue to go upwards, and the next important resistance would be at 4750, right? Let me say it one more time, 4750. So right now this is the structure that the divergence is over, right? If you see this candle, so this is still below the high of the previous highs, right? So still the hidden bearish divergence is there. Bears have tried to push the prices downward, but you can see that within this range of this strong candle, which is the third candle of the day, prices are still trading in the range of this. So still the buyers are in control and they are very strong. So if you're very aggressive and if you want to take trades, otherwise it's my personal opinion that you should wait for this consolidation to get clear, then only think of taking trade. Otherwise you can take a trade towards the buy side, right? So almost for the next 22 minutes, still remaining for this candle to be closed and we can catch that momentum. Now to have a microscopic look, we'll see the small time frame, but before that we need to see uh, a higher time frame also. So let's see this on a H1 time frame, H4 time frame, right? So over here we have marked this important area. This is a resistance area, right? Over here we have the exhaustion. Then prices break this. Then again, they get into this area, right, which I've highlighted with blue color. Now again, prices are trying to bypass this area, right? And you can see the minute trend which I've drawn, which is an indication that lot of trend line liquidity is being there. So the chances of a fall to the downside is also very promising, but not from here. We need to wait. And over here, you can see that I marked this swing point and I've drawn the Fibonacci extension. So right now, prices are exactly trading at the Fibonacci extension of 100. The next area would be at 4660, right? So within this range, chances of a reversal is quite high, and just above it, because on a bigger time frame I've drawn the Fibonacci retracement, right? So their levels are also residing. So yes, from, and we have this swing points also, and this is exactly at 4730, right? So they'll sweep the liquidity and then there might be a reversal into the prices toward the downside. But overall, currently the price action is telling us that yes, still there is room available for the prices to go above, right? Now let's have a look into 15-minute time frame. So see a very strong move, a sharp fall, then a sideways movement, right? And see this high point, this low point, high, low. So the high low has been broken. That means now they are designing the trap and sweeping the collecting the liquidity right now. So again prices will go up above the high, then again we have a fall, right? So this is a broadening wedge formation right now. And when this kind of patterns happens, it's better that you should take a sell on rise and buy on dip strategy. Okay. So, and if prices get a U-turn from here itself, then we have a start of a new downtrend because we have the lower low and lower high formations. So we can think of taking the sell call. But right now, still we need confirmations to form a lower low formation. Okay. And over here, if you see, the RSI of the 7 period which I've used is not been oversold yet, right? It is trading near the 50 levels, right? So there is no clear direction into the market. If I combine this price action, so there is very strong wick is there, a strong shadow, and right now prices are showing strength toward the upside. So this is for the gold. Now let's come on to the silver. So see the silver, this is the market structure which we have identified, right? We have given the projection yesterday that prices will go up and test this area, this trend line, right? Which is the ascending trend line of this channel, broadening channel. And now the prices have taken a U-turn, prices went down, and again we have a sharp pull for the upside. So now from here, we have a new market symmetry which is been under construction. So we need to connect this low with this low, right? And this is the new trend line have been started, right? So the channel have corrected towards the upside. Now the immediate resistance is at 73.46, right? And after that we have this zone which is coming, which is a bigger time frame zone over here, which I marked right into the H4. You can see this high. So let me extend this also. And surprising fact is that over here my Fibonacci extension 61.8 level is also residing. So almost two things are overlapping, right? So the probability of a correction from here is quite high, but till the time we can take the buy call because there is still very good space, very clear highways there, right? So we can have almost 100 pips of movement in silver for the upside, right? But yes, after making such a strong candle, prices have halted, right? So it's a kind of a breath catcher, right? Break which they have taken, and now they are again pushing the prices upwards. So this is the climax because see the volume is decreasing. That means the climax is under development, and soon they will design a buyer's trap, and chances of a reversal toward the downside is very potential. Okay, so till the European session, we think of taking a buy call, and in the US session, chances of a reversal is there, right? Now we have taken the confirmation, we have identified the levels. Now we need to connect those levels and the timing of those levels, right? With the economic calendars, right? Because economic calendars will play a very catalytic role because if that data surprises, so the current prevailing trend might get a U-turn, right? So we need to have a focus on the psychological triggers which are coming from the economic calendar. Now moving on to, so after discussing all the technical charts of all the segments, we'll discuss the economic calendar. Now we come on to the energy prices, right? So you can see that after the sharp fall, prices have made the low of 83.95, and after that prices are continuously making small swing highs right toward the upside. So on a smaller time frame, if we see on H1, we might see a strong upward trend, but if you see, it is still trading in a sideways range, right? So and the upside momentum is not that promising. So anytime a very strong reversal might come into the oil prices, right? And if this happens, then gold will go up. So this is the thing. Apart from this, we are having lot of news which are coming, like the Fed is right now balancing or maintaining their balance sheets, right? And for that, they are taking or they are implying some strategies which will trigger sell-off in oil prices, right? And any news related to easing conflict in the Iran, right, in the Middle East is also put pressure in the oil prices toward the downside. Now let's see the current market structure. This is H4 time frame. Prices went up, taken a small correction, then again try to go up. So see a very strong impulsive move, short correction. As they have tried to push the prices, but as compared to the previous impulsive move, this bullish move is not that strong. And see, just in a one candle, just within a one candle with a very high volume also over here, right? Prices went down and covered all these threes, right? So buyers have tried, they have taken three candles to push the prices upwards, and sellers have taken only one candle of 4 hour to push the prices downwards. So it is a clear indication that who are in control, right? Without any doubt, sellers are in control. So, and this is a sign of profit booking, right? So they are pushing the prices as soon as the buyers uh, came into overconfidence or confidence that prices might go up, because every average Joe knows because of this war prices might go up. They take the buy and somebody starts supplying or distributing their positions, right? They are doing profit booking, and which have been done today. Will all the traders of the paper, right? Those who are trading into the paper gold, paper silver, paper oil, I'm talking about the derivative markets. They are going to submit their positions to the CFTC, and these positions are going to be released on the upcoming Friday. But today we will see that what have happened in the previous week, what kind of positions have been designed by the future traders, right? So which will give us the direction what the managed money is doing, right? So we'll discuss this after discussing the technical charts. So the upside is not looking that promising, and still sideways movement is still there, and you can see the Bollinger Band is also squeezing. Then you can see the CCI of default setting. Over here, I have the high, lower high. Divergence have been formed. I need prices to go below the low, then the divergence would confirm and I can take the sell call. If it is not happening, that means prices again go up, take hunt the stop losses which are resting above this area, and then again form a divergence, and then prices will fall, right? So right now this would be the moment. After a few sideways movement, prices will go up, test this Fibonacci extension levels which I've drawn by taking this swing points, and then again there might be a fall into the prices, right? And over here, this scenario is only going to work when we have the divergence been forming in both the oscillators which I've used. One is the CCI, second one is the RSI 5 period. In RSI 5 also we have the divergence being formed, right? So chances is quite high. So this is one scenario. Second scenario, right? If prices takes a U-turn from here and take this low, then selling would be confirmed. We can keep the stop losses above the high of this and take the sell call. Now for the natural gas, see, prices have came into this zone, right, which I've identified, right, and prices taken uh, the resistance, right? They have tested this resistance and then taken the U-turn again. And see, my Bollinger Band is also, all the bands are pointing downwards, which is an indication that prices might go down, right? So I'm waiting for the prices to take this low. If this low is taken, I will take a short call in natural gas. Second thing which is giving me more confidence is that see the ADX value. ADX is value is near 11 right now, 11.18. That means soon there will be a new trend will start and the ADX will start moving upwards. And ADX line, which is the blue line, if it is moving upwards, that means whatever is the current prevailing trend is getting more stronger. So because they are at the bottom, soon we'll have a new trend, and that will be the bearish trend. Why? See, over here. Plus DI and negative DI have given the crossover. Red line is above, that means bears are in control, and green is going downwards, which is an indication that right now sellers are strong and current trend is of sell. So if sellers are getting aggressive and the ADX is also improving, we can take a very good short call for a very longer period of time, because we are discussing everything on a daily time frame. Now come to the currency part. So let's have a look on the GBP USD. Right, yesterday we have marked this area that prices have taken the correction below this low. You can take the sell call. You can see I have already taken my sell call. I booked the profit of 1:1. Here my final TP is there, and I have revised my SL at the entry price. Right, so prices might come up, and I will be stopped out from the market at no loss, right? At break even, I already booked the profit in the TP1, the same thing I've told you, and still it is trading in this range, right? So prices have swept all the liquidity, so chances of reversal is there. But see this candle, right? It is an indication that after taking the high, still chances of a sideways movement is there. Then if prices continue to go upwards, it will be a start of a new trend. You can hold your buy positions, and if you have a breakout towards the downside, you can create a long term sell call also. Now let's have a look on the Euro USD, right? Second thing, one more thing I want to discuss over here. Look at this, right? We have one low, then we have the another low, and see bullish divergence have been formed in RSI also, in CCI also, 14 period bullish divergence have been formed. Here we have lower low, here we have low and a higher low. And if prices clears this area, chances of a impulsive upside move is there, and the next resistance would be at the same level, right? Which is this. Okay, this area. So yes, if prices went up, prices might test this gray area. Now let's have a look on the EURUSD, and this is H1 time frame. And see over here, I have marked the hidden bearish divergence, given you the trades also, right, in the BMC premium also, and we have booked the full profit into it. So prices have fall from here, and now see this high to this high, right? Again, we have the lower high formations over here. We have the high and a higher high formations, which is a hidden bearish divergence. So again, if prices try to go upwards, they might face a rejections toward the downside, right? So GBP USD is very good, but for USD we need more confirmation, right? So wait for the prices. Still, there is no clear trend is there, right? But yes, after few hours, you'll get a very clear direction that whether it is taking a U-turn or not. Second thing, I've drawn the Fibonacci expansion. See, this level have been tested. Prices went down again at the Fibonacci 100. Then again, they have taken, after a consolidation, they have taken a U-turn. And then again, the Fibonacci 61.8 level, which is our prior support, now acting as a resistance, which is being tested, and again prices have pushed down, and again they have taken support from the Fibonacci 100. So mark this area as a channel or as a range, and wait for the breakout of this area. Okay, but if the downside breakout happens, you can take the positions from the Fibonacci 100 itself. But for the buy side, because we have one gray area resistance sitting over there, then we have our Fibonacci. So we are having two resistance points. So prices need lot of efforts to break this level, right? And if they are showing that they might break this, that might be a trap. Then we have the hidden bearish divergence also. So wait for the prices to test this area. Then if they are taking the U-turn, then we got the confirmation to take the sell call. Otherwise, we need to wait after the breakout, retest, and then again the continuation happens. Then we think of taking the buy call. Till the time the biasness is not clear in the Euro USD. Now let's discuss the USD CHF. So in USD CHF also we have taken the trades, right? Uh, so I've taken the buy trade, right? Prices went above it, but went sideways, and I've taken a very small stop loss, which have been stopped out, and still the prices are trading in a sideways range, and they are kind of making a top over here. So chances of a reversal is there, and if USD CHF is going to take the corrections toward the downside, gold and silver would get very good strength. towards the upside, right? So we need to wait, or either we need a clear break of this structure, right? So if USD is moving upwards, then we can think of taking the sell call in the precious metals. Let's have a look on another dollar pair, which is the USD CAD. Over here also I've taken the buy call when the prices are taking the consolidation, right? And still that trade is active. So I've been waiting that prices might go up and take the high of this, right? Over here I've already booked my 1 TP of risk to reward 1:1. Second TP I'm waiting. So what I'll do, I'll just revise my stop loss at the entry price, right? So if prices takes a U-turn, I'm still in profit and this position will be stopped out at break even. So for USD, still I'm towards the upside because of the oil, CAD and dollar both are correlated with the oil prices and both are in strength, and that is the reason we are seeing a sideways movement. Okay. Now let's come on to the USD JPY. First we'll have a daily look, right? See, the test of this trend line have been done, right? And again prices are showing trend toward the downside. So the probability that the apex of this symmetrical triangle, which is at 159.28, might be tested very soon. And once this test is done, and if again prices are respecting this trend line and showing heads rising from this trend line, then I think of taking a buy call in the USD JPY. And if this level is broken, then my biasness toward the sell side will be very high. Okay. Now let's move on to the next segment, that is the indices. In indices, first we'll discuss the US 30 and the UK 100, right? Because in the UK 100, they have shown the strength to the upside, but whatever analysis I have done, I think that prices might take a U-turn toward the downside. So first, let's have a look on the US 30. So this is the H1 time frame, right? We have drawn the Fibonacci, right? So let me remove it first. Lot of noises is there, right? So, okay. Now let's have a look in the H1, right? So a very strong move, a correction, right? Then again an impulsive move. But over here you can see that something happens when this candle forms, right? Over here also we have the green candle, which is an indication that in the previous sessions, that is on the Friday, buyers have tried to push the prices upwards. Then again, buyers have tried and tested this level, then again they have tested, and again they are getting rejection from this area, right? One rejection, second rejection, third rejection, fourth rejection, the fifth rejection, right? And right now the sixth rejection is happening. Okay. Still they are not showing strength that they might clear this area, right? And if I draw my trend line, so my trend line would be like this. Okay. From here to here. So the chances of a small corrections toward the downside is still there, right? So this is one scenario. Second scenario is prices takes a U-turn and clear this gray area, then clear highway prices might go up to the level of this area, which is at 46174. Then I take a buy call. Otherwise, I will take the sell call till the test of this trend line, right? Might be very small candles will form. And in the US session, there will be a reversal because we have seen two strong green candles standing and safeguarding their stop losses, which are resting below the low of this trend line. So the third test is still pending for this trend line. So help the market to have a third touch of the trend line. So first we can take the sell call and then we change the biasness once the test is done and think of taking the buy call toward the upside. Over here, if you see the RSI of 5 period on the basis of high and low, you can easily identify a higher high formation and a lower high formation, which is a classic bearish divergence, right? So the probability of a short-term correction is very, very high. Now let's have a look into the UK 100. See this strong candle over here, right? The trend line already have been tested, but we have the whole day, almost 14 hours is remaining, and we want this candle to give us a close, right, above this trend line, right? If we see exhaustion in the very next day, the chances of a very sharp fall is there. That is the reason I have given the arrow. So today also we need to watch this, and high probability that on Wednesday and Thursday we might see a very good movement coming into the UK 100 prices, which will give us a very good profit, right? If prices continue after giving the close like this, if we have a strong green candle and if prices continues to go up, taking the buy call would be very good. If prices closes like this, but on the very next day without taking the high, prices takes the low, then we might think of taking the sell call, and very good fall we can expect into the prices for the UK 100. So right now we have to watch this, and don't worry, you don't have to waste your time in watching this, because we've been following this chart very rigorously, and you will find all the latest development in the BMC premium community. uh, so go through the community or the BMC Insight, you can have it, and those who are the existing clients of the BMN Capital, they have the opportunity to connect with us directly. Now, in the last, we have the BTC USD. So let's have a look on the daily time frame. See, this I've told you that this is a very important low. I marked this arrow. Prices breaked it. Right now they are moving sideways, and see the exhaustion, right? And today also we have seen the exhaustion. So this exhaustion is telling us that the soon this sideways movement is going to be end, and we'll have a very good breakout. And on a smaller time frame, if I mark this zone, already a fake breakout toward the upside have been done, so the probability of a prices to go down is quite high. But to be very conservative, I need the close or the breach of this low, which is at 64937, right? So almost 65,000. If prices came down at 65,000 levels, taking the sell call would be very good, because prices are uh, being rejected from a very important level. Right now, let's have a look on the H1 time frame. See, this is the consolidation for which I'm talking about. If I mark the channel, right, let's say I'll take the regression channel over here, right? So if I draw this regression channel, right, till this consolidation, the breakout have already done. Prices again came back down, again they have started, and again going down. Lot of people see this, those who trade on a smaller time frame, are double top formations, right? So the probability of a downside break is quite high, but we need clarity on this channel, right? I need candles to give me the close below this channel, right? Then we think of taking the sell call. But yes, the biasness toward the sell side breakout is very high. So that's all from the technical part. Now let's have a look on the CFTC data. So for this, let me share you my screen. So first we see the CFTC data over here. Okay. So this is the CFTC website, and I hope my screen is visible. We need to see this is silver, this is gold. So we'll discuss gold over here. Right now, let's have a look on this area. Right now, see what the managed money is doing. They are holding 90,000, 1,19,000. Previously, it was way high, right? There is a ratio of 1 is to 6. Out of the longs, they have booked their profit in long positions by 10,000 contracts. Now you know that if prices are falling, who is doing the profit booking, right? So they have booked their long contracts by 10,000 contracts. It's so huge, right? And for the short side, only 163 contracts. And still their long side is heavy. Now let's have a look on the producers and merchants. So those who produce or extract gold, right? They are holding only 12,000 contracts toward the long side, and 34,000, almost 1 is to 3 of resto reward toward the sell side. In the long side, they have also booked the 3,000 contracts, and they have increased the short side positions by 1,200 contracts till the March 24th. So I'm talking about the last week data. Now, swap dealers are just doing the opposite, right? So, producers and merchants, to hedge their inventory, they create a heavy short side positions, because they fear if the prices falls, so they can balance their losses of their physical inventory which they are holding by the future contracts. On the other hand, the managed money try to catch the movement, right? Hedge funds, they want to make money on the every impulsive move, right? So they are still heavy towards the long side, right? And they have booked the profit booking. So if they want to balance their positions. So still lot of contracts still they are holding which they can book. That is the reason whatever upside momentum which we are seeing is not aligning with the institutional positioning, and the chances of a sharp reversal into the old prices is quite high. And when this happens, always remember this sessions, that who is booking those profits, right? And don't get trapped. So just remember this. Now, the swap dealers provide their services to both the parties, the producers and merchants also, and the managed money also. So, and they just do the opposite, right? If their client are very much optimistic or they are heavy towards the long, so they will create their hedge on the opposite direction. That means they are heavy towards the sell side. And see over here, on the long side, only 36,000 contracts. On the short side, 2 lakh 17,000 contracts toward the short side. That means their clients, right? Those who are the big players of the market are very, very aggressive towards the long side. They are holding their positions. And when the fall is coming, right? So just because of this panic, they need to reposition their gold positions, right? In that case, we might see more fall into the prices, and this is going to be happen. So we need to have a keen eye onto this data. Same kind of data you can find in silver, but I'm not going to discuss all. Energy, crude, every commodities data you'll get over here. Okay. Now, let's see the economic calendar for today. So this is the 31st of March. But before we discuss 3-month bill auction and 6-month bill auction, the interest rate have went down, which is a bad sign for gold, bad sign for dollar, sorry, and good sign for gold, because they are offering very low interest. So instead of investing into fixed income where the yields are depleting, I would invest or transfer my money into the gold, and that is the reason gold prices are showing a short-term bullish momentum. Now let's have a look on today's data, right? So we have lot of data from the Japan. The important one is that once it crossed the 160 levels, automatically one button will trigger. That is the button from the Bank of Japan, and Bank of Japan will enter the market to control the rates of their currencies. Then we have the RBA meetings, right? So this is very important. We have covered and we have provided the insight into our group. So I'm not discussing that. They are also very confused and they are not thinking of taking any steps. But yes, they have mentioned that if the Iran tensions escalates and the oil prices rises, so because of that, to control the inflation, there may be interest rate hike coming. Okay, they might increase the interest rates. So they have given this hint, and because of this, the interest rate derivatives will have a very tremendous effect. For that, you need to see the CME Fed Watch tool, right? Now let's come on to the data which are still pending to be released. So at 2:30, the most important data for the Euro group is the inflation rate data, right? So which we need to see. Previously it was 1.9%, and when the oil prices and energy crisis is there, inflation should rise, right? And the core means that the energy prices are not involved into this, right? So we need to compare both the datas, right? So previously it was 1.9%, and the consensus of the analyst is toward the 2.7%, and this is same as the previous one, right? So if there is any kind of surprise, if inflation is rising, there would be no interest rate cut or a interest rate hike. Same kind of tone is coming from the ECB members also. And if this thing happens, whatever room which we have discussed in the EURUSD prices, we'll see that prices might clear that gray area which we have identified, right? But for that, we need this data to be very clear, right? I think this data have been already released. Let me revise it. Okay. Okay. So yes, see this. 1.9%, now it is 2.5%, and that is the reason we're seeing a very good momentum into the prices toward the upside. But at the core inflation, that means the majority, it is telling us the reason for the inflation, right? See, over here the inflation rate has been risen by 2.5%, right? Because all the prices are involved. If I exclude the energy prices, so see, all the commodity prices are not has been spiked, right? Because previously it was 2.4%, and right now it is 2.3%. So it is very good. Now let's come on to the, so this is South Africa bond auction is also very important. Yesterday also we have this. Then for the Canada at the 6, right? And this South Africa balance of trade is also very important at 5:30. This will bring kind of very good volatility into the gold prices and silver prices, right? And those who trade base metals like copper, zinc, aluminum, this data is very important. Then at 6 p.m. we have the Canada, because we have discussed the US CAD, right? I'm still holding the buys. So this data is very important. We need to see whether the GDP is improving or not. Then comes the US data, and we have lot of US data, but if I want to market, so for me, this JOLTS job opening data and the CB consumer confidence data, it is a sentimental data. This is very important, right? So previously it was 91.2%, and right now the consensus is for 88%. That means confidence going down, dollar will go down, and gold will go up. Simple as that, right? And then we need to see the labor market data, which is the job opening. We have seen tremendous fall in the job creation, right? Labor market is suffering right now. And as a result, we need to see that whether how many jobs have been created into the US. If more jobs are creating, that means more people will have job, they have disposable income, it will have a negative impact on the inflation. That means they spend more and the inflation will rise. So that is the reason this is the very important data. And at 6:30, the house price index data is also very important. Then in the last, we have corn, cotton, soy. So this is the data which is important for those who trade in the agri commodities, right? So if you are into that, and if you hold futures, so you can see this also, right? And why this is, previously they don't provide this kind of data, but right now they are providing this data because in the war scenario, first and the foremost crops which are being impacted are the wheat, soybean, and corn, right? It is being consumed throughout the globe. So how the prices are being impacting because of this war is very important, right? For each and every economy. So that's all from my side. We have covered the CFTC, then we have discussed all the important datas. We have understood very well that how the market symmetry is being forming for each and every asset classes. So I've done my best to do the value addition into your knowledge and given you the clear picture of the market. So that's all from my side. And I thank you for watching this video. And I know that this video is going to help you a lot in taking the right trading decisions for today. So I'm signing off for today. Till the time, have a great trading day ahead. Thank you. I request all of you to kindly leave the Google Meet room, and this is a recorded session. You might get the link, and if you want to watch it again, you can visit my official YouTube channel with the name My Star Mentor Anurag, and you'll find the recording of this session. Thank you, guys. Thank you.